as soon as there's money involved, there's always some manipulation. I think the markets are very manipulated. I think the gold market is. I have a little strategy on how to trade that every day, every morning, not every morning, but when there's a setup, simply because the markets are clearly manipulated. When buyers step in or sellers step in every day, it usually repeats. When there's a certain criteria, whatever happens today, you mimic it tomorrow, and you can play the same window of time and play against it. So they're clearly manipulated.
This is Little by Little with Andy Schechtman.
Hey everybody, how you doing? Welcome back to another episode of Little by Little. I'm very psyched to have with us Chris Vermeulen, the CEO of Technical Traders. Chris, how you doing, man? Welcome to the show. Appreciate you being here.
Yeah, thanks for having me. Pleasure to be here, and excited to talk markets.
Let's do it. You know, I had planned to ask you a couple of questions, and in talking to you off air, you answered something very interesting to me. And I asked you about how you would factor in macro events and with technical analysis. And you said something that it's obvious, very obvious, that really you don't factor that in. It's all price. And that makes sense. So I'll skip that reasoning, and what you said was completely logical. So let's just go right to it. What do you see right now? What's on your radar right now from a technical perspective, as broadly based as you want to go?
Yeah, well, we can start on a huge, broad picture of just the whole global equities market. I mean, if you go back in time and you look at the SP 500 and you go back 50 plus years, you'll see almost all country ETFs, all country indexes, they pretty much all move together. The odd one might buck the trend or delay or happen a little quicker in terms of it topping or bottoming, but the markets generally move together. And for me, I have narrowed in on the SP 500. And to me, if I know which direction the SP 500 is going in the market sentiment, we can really gauge should we be long equities or out of equities. And so I think most people need to understand, is money flowing into equities, and is that like a rising market environment, a bullish one? Should you be long equities? Or is it in a topping phase, which I believe we've been in actually for a couple of years? The large indexes like the NASDAQ, the SP 500 are kind of blinding people with camouflage, with the Magnificent Seven kind of doing most of the heavy lifting, but the majority of stocks are struggling. Equal weighted, the small caps, micro caps. I mean, the Russell 2000 looks like it just put in a major double top about a month ago. You need to really understand, is the market going up or down? And right now, if I was to look at this market, I would say we are like on the cusp of an actual market top, potentially, is already just happened, or we're like a month or two away from the equities markets. And I think we're going to start into a multi-year bear market, and things are going to get pretty ugly. So I think the opportunity, once the trend turns down, because technically stocks are still trending up on a long-term basis, the opportunity is going to be to bet against markets. You want them to go down. I think bonds could be a great play. The US dollar index, I think, is going to be a good play. I think those are kind of the core plays to use when there's an economic reset, a financial reset. There are some so-called safe havens like gold, which has been doing very well, but the way it's been moving is telling us we are on the cusp of the market's breaking and the financial system's breaking. And unfortunately, gold and precious metals usually get pulled down temporarily for it. I think it's going to be the best opportunity for gold in the longer run. We're going to see gold and silver pull back. And hopefully late this year, early next year will be that last opportunity to get in to precious metals before I think we see a 4, 5, 6 year rally, and it'll be awesome. It'll be amazing to be into physical metals and mining stocks. But to me, the opportunity is more so protect your capital, find some ways to grow your wealth, or at least just protect it if the economy and the stock market does top here.
Yeah. And, you had mentioned in a recent interview that economic uncertainty, partially stemming from Trump's actions, will contribute to both market volatility and to attractiveness of gold. Where do people not want to be right now? Where should people be avoiding? Are there areas that you're focused on that you're particularly concerned of? outside of the Mag 7, is there anything else that's on your radar that's got you concerned? Maybe currencies, bigger picture?
Yeah, so I think there's a couple really interesting pockets. I think the energy sector, energy stocks. If you look at what like XLE, the ETF for the energy sector in general, it has been moving up and to the right. It's got beautiful price action. It's been going up for years. Oil has been going down and sideways for years, and oil's on the verge, I believe, of breaking down below about $66 a barrel. And when it does, I think it's going to plummet. And it's funny because we have this huge divergence we saw this back in 2007, 2008. Money moves into gold. Money also moves into energy stocks, usually because there's chaos and there's wars, and we tend to find people get nervous. So they move to energy stocks as like, hey, if all hell breaks loose, oil should rocket higher and energy stocks should benefit. And I think that's where we are right now. And energy stocks are high dividend paying, a lot of them. I think energy stocks and dividend stocks are going to be two of the most dangerous, have some of the biggest losses for passive investors. And unfortunately, those big companies are what most retirees have with the buy and hold strategy, and advisors are always into dividend stocks. And unfortunately, just like recently, we have the SP 500 near all-time highs. The dividend sector of high yield SP 500 dividend stocks are down like 9% or so. There was a huge difference. And during COVID, we saw the SP 500 pull back 34%, which was huge, but the dividend sector pulled back 48%. And that is because, and this is the big problem with energy stocks and dividend stocks, the two places I don't think you want to be is because all the majority of the money in the U.S. markets are usually 50 plus, and they're all the same people, are all retired. They're worried about their lifestyle. They don't want to lose their life savings, their retirement money. And when they all panic at the same time. Typically, there's tripping points or tipping points, and they all sell. They call their advisors, they dump stocks, and they're all selling the same stocks. So the big blue chips, dividend paying, and they all just hurt themselves because they dumped the same thing at the same time. And that's what we saw in COVID.
You know, that reminds me of where we've been, I don't know, for several years, maybe even since 2014 or thereabouts, as crazy as that sounds, to my knowledge. Central banks net have not been buying any new treasuries. And over the last several years, last 3 or 4, the American public has been buying all of treasuries. Do you see a similar setup potentially there, where it seems like gold has been left alone? Everyone has run into treasuries, chasing yield, moving into money markets, record $7 trillion into money markets. Does that concern you? It seems like a very similar setup, that all the money supposedly went into treasuries and other assets completely ignored. Is that a potential trap as well?
Yeah, I mean, I don't know what will happen with treasuries. It's kind of a little worrisome. Who knows what will happen there? But there's a lot of people saying, there's record amounts of cash on the sidelines. The stock market's going higher. I mean, I'm the complete opposite. I think things are about to fall apart and catch most people off guard. But there's also more money out there. So you need a lot more money to make it kind of viable. Like if you compare how much money was out there before and sitting on the sidelines compared to how much money's out here now and sitting on the sidelines, yeah, it's a much bigger number, but really it's still, people are looking for protection, and there's more people close to retirement or retired now than ever before, which is why there's also, I think, a huge chunk of cash. People just don't want to risk their lifestyle. They don't want to risk their life savings. There's so much uncertainty. So it could be a trap. I think one of the biggest, scariest things, I think, is a lot of people might sell their equities and move their money to their bank, or sell some of their real estate and move their money to the bank. And then, of course, I think a big concern is the banks might go bankrupt, or maybe, and right. So you go to protection, and then your bank blows up. I think it's more of a threat in the States, but I mean, it could happen anywhere. And I think that's one of the reasons we see a lot of people moving to physical gold, because, hey, you got gold, it's out of the banks, it's out of the financial system, it's in your own hands or third-party vault, right? And I think that's the reason why we saw gold do so well just before the 2008 crisis. People just liquidating and saying, I am not putting my money in the bank. I'll take a physical block of steel and bury it. And that's what's going on now globally. Gold is that global to me, barometer of what people are thinking and feeling. And the fact that we're hitting all-time highs is telling us that the world is nervous. They don't trust banks. They don't trust other assets, and they want to hold something physical that's not manipulated, or not manipulated, but not held by another company that could just vanish, go out of business with all your wealth.
Well, it's interesting, and I'll want to touch on gold in a minute, but I love that you say that about the banks. I don't think we're out of the woods yet either. We saw the first bail-in Lindsay, Oklahoma in October. And is there anything you're seeing from a technical standpoint in the bank stocks right now that would lead you to believe that perhaps it's on shakier ground than one might think?
I mean, the banking stocks have been doing pretty well recently. I mean, they've had a huge run. The equities market is a tough gauge because really, the market participants are generally pretty blind. They chase pricing, they drive markets up, and usually the market is caught off guard. So you can't always just look at price action in terms of Bitcoin is the best investment ever until it crashes, right? So the banking system is doing fairly well in terms of stock pricing, but I'd be a little leery. I mean, the regional banks aren't nearly as strong. I think they carry a lot more risk. They're a lot more volatile. But you can't really see it in the stocks. People are kind of piling in. We're in this, what I think is a complacency stage. We saw a lot of money piling into the ARK ETFs, the Magnificent Seven, a whole bunch of biotech and a lot of really aggressive stuff over the last several months. And that to me, and everybody seems to be getting very bullish, that to me is a warning sign. And a lot of people move into the banking stocks because they do pay dividends. And I think people are looking for that safety. And I think a lot of people just don't want to think or don't know the dangers, I think, of the financial system. I mean, it's so brittle. The whole stock market and the financial system is so brittle. It's pretty scary how bad it's really run and kind of managed. It's scary. So the price action doesn't always give you a warning signs, specifically, but you always have to be aware and follow price trends.
I appreciate it. I'm not going to put you on the spot and ask you. You can answer it if you want. A lot of people in this industry think that precious metals have been manipulated for a very long time. And I think the evidence is there to suggest that. I mean, to a large degree, markets don't trade, in my opinion, the way that they have with the AM and the PM fix being down, 99% of the time and heading into New York and I won't rehash that, or JP Morgan paying fines for manipulating the market. Does technical analysis work in a rigged market? And does it allow, if you can acknowledge that the market is not freely traded, even to a little bit, does technical analysis find a way to see through the manipulation?
Yeah, I definitely think the financial markets and gold everything's, as soon as there's money involved, there's always some manipulation. I think the markets are very manipulated. I think the gold market is. Sometimes the manipulation can get you out of a trade or throw you off. But generally, the manipulation, I don't follow very short-term trends. So I'm not worried about too much short-term manipulation. I look at bigger waves and cycles in the market that last hopefully 20 to 60 or 90 days. So usually manipulation is a little bit shorter term than that, I think, in terms of really affecting you. So I'm always looking at the tide, is it going up or down? And the manipulation is usually very short-term movements that will throw us off. It'll kind of buck the short-term trend, but it won't kick us out of a trade. But you're right. I mean, I did an article a long time ago. I'm actually about to do a video on it showing the Kitco chart. You can see the pre-market, the last 3 days, and they overlay the price with, I think, a green, red, and blue line. I have a little strategy on how to trade that every day, every morning, not every morning, but when there's a setup, simply because the markets are clearly manipulated. When buyers step in or sellers step in every day, or usually repeats, when there's a certain criteria of whatever happens today, you mimic it tomorrow and you can play the same window of time and play against it. So they're clearly manipulated. Technical analysis seems to do very well. It doesn't seem to throw us off the game really, and I think maybe it's even woven into almost how the analysis that I do works. So I found ways so it doesn't throw me off the game.
Use it to your advantage. I like that. And kind of the reason I ask, and because Chris, I believe something bigger is going on right now with gold. I really do. And then none of us really know what is going on. I don't think it's the Trump tariffs. But the United States has become a net importer of gold since November. We've imported just from London alone pretty damn well near 13 million ounces of gold, and from all over the world, Singapore and Switzerland and other places. We're seeing metal come in at a massive level. Do these inflows or these trends influence your analysis even a little bit? Now, I know you told me that the macro perspective, it's just price, but at some point, when you look at something that is such an outlier as this and see all of the central banks scurrying not only to accumulate, but to repatriate, but doing so on a level that only if you're paying attention up here do you notice it, because the retail public hasn't picked up on this even a little bit. I know you have. Does that change your thinking even a little bit right now?
Yeah, so I look at gold very differently than how I trade and invest with stocks and bonds. So to me, I only really hold physical gold. If we're in a raging bull market, I might trade ETFs around in miners, but I'm a big fan of physical gold. I look at gold as an insurance plan in case a currency blows up or there's a crisis. You have something that you can pay with. You have something that should skyrocket in value to counter the drop in value of your currencies, of your savings, of your real estate, whatever it is. So I look at gold as an insurance plan. I don't really sell it. I only ever accumulate more physical. And I totally think what's going on is very fishy. Something is up, and you need to have physical gold. If you don't have any, I think you should have some. And if there's any lower pricing over the next year or so, I think that'll be probably the last opportunity before whatever's unfolding. The charts are pointing to a huge upside move starting within the next year or so. And then what's going on with what you just mentioned, there's definitely something brewing. So I think it's going to be very critical to have physical metals and accumulate it, because it doesn't really make sense. It's blatantly obvious that something is up, but of course we won't know until after it's done.
So I'm gonna cut this short. I'm gonna ask you one more question. Then I want you to tell people how to find you, because you have a proven track record and you understand what's going on. To me, that certainly qualifies you to I think, from a technical standpoint, I think to see things maybe clearer than other people who are consider themselves technical analysts who don't acknowledge things like you just spoke about. And some of the questions I was going to ask you, I'm skipping because you properly addressed it. They were more macro based, and I think we'll address that well. Silver has a 50-year cup and handle formation, and when you apply technical analysis, what does it mean when you have such a powerful signal that is that long in developing? Does that tell you that the upward trend should really be significant, since this is a 50-year formation?
Yeah, like the bigger the formation, the bigger the upside potential. And I mean, silver's got it's got pretty big upside. I mean, it shows that the first target, if it was to really take off from here, would be about $57 per ounce. I think silver is going to go into the 80s and probably break into the 100 mark and beyond. I think it's going to go pretty crazy, but the time's not here just yet. But these big patterns definitely play out. They take a long time. As you said, it's a 50-year kind of chart pattern. So it could take, many years, a decade to fully unfold. But silver is that rocket ship. That's what I like about it, is when we are in a bull market and money's flowing in, you definitely want to hold silver, because, man, does it ever go straight up. And same with gold. Gold's had a big pattern as well. And it is pointing to, way up in the 35 and $5,500 ranges when you extend upside targets with momentum. It's percentage-wise isn't nearly as big as it is for silver, but gold is kind of the more stable asset class. But
always, when I'm doing interviews, my dogs have something to say. So I'll ask question. I guess I lied. I'll ask you one more quick question. Everyone probably asks you, especially your buddies, all right, so what's your time frame? I mean, do you have any thought in mind? Because you can't, when you're talking with your buddies over a beer at the bar and you're talking about technical analysis, you're not going to get out of the, well, when do you think that'll happen question. So what's your time frame for people wondering? Because, I think gold has outperformed, if you're paying close attention, it's averaged almost 10% a year for 25 years. But So many people, especially with silver, have hung on for so long, and they feel the counterintuitive nature of the world and the performance of silver and not keeping up with gold has left so many people so frustrated. If you could leave them with one piece of info, maybe a glimmer of hope, if you had a gun to your head, what kind of time frame do you see? Let's even talk about in the next year or two. Are there targets you're looking for?
In gold and silver?
Yeah.
Yeah, I think over the next year, gold's going to struggle. I think it could be down at 2,400 again. I think it's going to pull back with the economy, with big selling. It really depends on what this wild card is with the U.S. bringing in so much gold. Like, what are they doing? What's their plan of some new regulation or something? But given there's no black swan event like that that'll spark gold specifically, I do think it'll be under pressure. But I see gold by the end of 2026 being like 3,500, which isn't huge, but I think that's the start where it could really rocket higher after that and get into the 7,000 range. But it's going to, obviously, we need to see how things are going to unfold. I think the next 4 years with Trump is going to be really wild in terms of what's going on. And, there's a lot of crazy politics going on with the U.S. really trying to take over Canada. So trying to become another state, right? So there's a lot of uncertainty. And I think that's one of the reasons why gold is also holding up so much, is just because there's so much uncertainty. So I would say the end of 2026, we'll see gold and silver hitting new all-time highs again. I think there'll be a pullback in between there, but then they'll be off to the races. And after that, I think it's going to be a 4, 5, 6 year massive rally in metals, and the AI space is a game changer. We're going to come out of this recession, and it's going to be a totally new world, new industry, new everything.
Right on. Well, that's positive. I like that. The markets never go straight up anyway. So I guess pullback is okay, and especially if we're listening to people like you who are giving us a bigger picture from a technical standpoint. How can people find out more about you, Chris? I think your the way you presented all of this information is impressive, and I followed your work for a while. I know it is. So, but how can more people find out what you're doing, and how can they take advantage of your services?
Yeah, sure. Well, they can check me out on YouTube at The Technical Traders, or go to my website, thetechnicaltraders.com. I share market analysis. I share on the markets every morning. I draw on the charts and show what to expect and volatility. And I have specific indicators to let you know when you're going to be panicking and freaking out. Like a day like today, you and I are talking, the markets are down pretty sharply, and it gets the VIX up and the put-call ratio up, and our New York Stock Exchange money flow shows there's panic selling. So I just let people know this is going to be an emotional day. This is probably some type of big volatility washout, and I share the trades that I do with subscribers in my own portfolio, and people can just ride my coattails. I follow the markets. They can follow my analysis and either copy me or use it to their advantage and navigate their own portfolio.
Right on. That's awesome. Chris, I appreciate you coming on, bud. Thanks for sharing your insight, and hope to do it again with you soon. I hope you have a good rest of your day, and I'll look forward to picking up where we left off down the road.
Sounds great. Appreciate it. Yeah. See you next time.
See you, brother.
Little by Little with Andy Schechtman.